Hello and welcome to Asset House. This week we're going to make a start to our multi-asset series by interviewing Les Conway, Founding Director of Essentially Financial. Les is going to talk to us about how he selects multi-assets. So Les, getting us started, what are you looking for when you choose a multi-asset fund?
A lot of what I do is use multi-asset type funds for legacy type clients. So to me, the credentials of the fund manager are actually quite critical, as well, of course, in terms of their proposition, what they're actually offering, and indeed some of the numbers and some of the stats in terms of some of the performance.
So when you talk about the manager, are you looking at things like a track record predominantly, or is there any other kind of factor you look at more closely?
No, principally track record is the primary factor. I think it could also be argued for some, not necessarily me, that as I said before, the credentials of the manager might be relevant to some firms. There is something in that, because I think people recognise with names that they are more familiar with. That to me is not necessarily the be-all and end-all, but I think there is a relevance to some extent as far as fund management is concerned.
Okay, and another key issue, especially when we're talking about fund management in the current environment, is price. So how important to you is price when you're looking at multi-assets?
I think price is important, but it's not the be-all and end-all. I'm a great believer in the fact of there's always something cheaper out there, but it's not a reason that I would select or not necessarily select a given fund manager or fund.
Okay, and do you think clients really understand multi-asset funds, and how do you explain them to clients?
I don't think clients necessarily really understand a lot of things, but there again, it's not their, for want of a phrase, their job to do so. Or they're not in the position to do so. That's not what they're expecting or expected to do. That's where we come in. Having said that, I do have a strong view that a lot of noise exists in terms of some of the things that, although they're incredibly important to ensure that somebody's financial affairs and financial planning is working correctly, a lot of the stuff they're not necessarily interested in or need to be interested in, and therefore their understanding of things is sufficient for the level of that they need, but it isn't necessarily critical.
Okay, and onto the funds themselves. I mean, which multi-assets do you currently use? And over the past year, or even beyond that, how happy are you with the performance of them?
Well, historically, I've been using the Jupiter Merlin funds. Whether or not we actually classify them as multi-asset, I'm not entirely sure. To my mind, I think there's a whole raft of similar type of concepts of funds, which I think can be rolled into the same kind of bracket.
So this is a kind of blurring the lines between multi-asset and multi-manager?
Yeah, I would argue. And there's nothing wrong with the Jupiter Merlin proposition. I've liked it for some time, but I just felt there was a case to be a little bit more diverse and a little bit more proactive. The problem, of course, exists, and it's no reflection or no criticism of the fund managers whatsoever, and certainly not the multi-managers, multi-assets, etc. But the providers, and certainly the historic providers on their legacy type products, don't necessarily provide access to all these funds that we have available. So it's quite difficult if you've developed a proposition, or you've got one and you want to kind of have some kind of continuity across the board, and not least introduce an element of continuity with your legacy, you don't necessarily have things available that fit.
Multi-assets are often seen a good way to provide diversification, and I think it's fair to say they do that. The other thing, of course, in association with that is the kind of risk management side of things. Now, 2016, we've had Brexit, we've got possible Donald Trump, as president. It's been probably the ultimate year really for testing that, I would say. And would you say the multi-assets have held up well to that kind of volatility? Have they done what they claimed they were going to do?
I think broadly speaking, yes, they have. But there again, any outsourced proposition where you've got an investment committee that's involved, whether it's in-house or an offering you're buying in, to which point it could be a model portfolio service, a DFM, or in this case we're talking about a multi-manager route, you would expect there to be enough research to ensure that when things go a bit pear-shaped, or they think they might go a bit pear-shaped, that the actions are taken to make sure the diversification is there to counter. In essence, that's what you're paying for. You're paying for that expertise. So, number one, it is vitally important that happens. So it happens in a very proactive way, and not least with the examples that you gave. And secondly, that there's enough diversification to make sure it runs deep enough to ensure that all the bases are covered.
Okay, well, thanks, Les. That's all we've got time for today, but thank you for joining us.